Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, April 29th, 2020. In this video, we'll start out with an overview of the broad markets. I did post some charts this morning. We'll follow up there. I'll hit on crude, gold, sugar, really just commodities. I'll touch on that KHC unofficial trade idea because they are going to report tomorrow morning after the close, so you need to be aware of that. All right, so let's start out here with QQQ. The uptrend line yesterday was broken at yesterday's market end of day the wrap up. Mentioned we have to take out that 211.96 because it was there's really no follow through. We had those potential bear flags, but they never materialized on the indexes. We had a little whipsaw break down and snap right back up. So we're back above the trend line now, so that I can't say that nothing technically has changed because we did have that false breakdown. Again, there wasn't any follow through after the red candle that went down through there, and we still have SPY above trend and ES, so we'll get to those in a second. But as far as the divergences are still very much intact. Markets rallying. They liked what Alphabet had to say. Ironically, I don't know if anything's changed. Let me see. The two other big, NASDAQ 100 components that reported last night. We had, what was it, Starbucks. Starbucks is trading down 1.6% today, and AMD was the other one. Both those, I guess that's institutional distribution or selling into that. So, and remember, it's all about weighting. When you have, the market cap on Alphabet, you add up. Let's see, both of them, Google, Alphabet, these are nearly, this is nearly $1 trillion company here, close to it. And when you go down the line to those other two, let's see, let me go back to my, I'm looking at another watch list on another monitor. AMD is only a $63 billion company. And then Starbucks is a $91 billion. So they're not going to move the needle. It's all about tech. And right now the market's rallying on only one of the five market-leading FANG stocks. Remember, we still have the remainder reporting tonight and tomorrow, and so here's what I said before is holds true. I think this week I said I cautioned, at least this is how I trade. Take any move, any breakdown or breakout, in other words, any bullish or bearish technical event with a pretty big grain or lump of salt, I should say. Because you have just still a very heavy economic calendar, and 4 of the 5, so 80% of the FANGs have yet to report. They're going to report tonight and tomorrow. We have who is it tonight? Microsoft and Microsoft and Facebook tonight, I believe it is, and then Apple and Amazon tomorrow. So. As the late great Samuel Clemens, better known as Mark Twain, once said, if you don't like the weather in New England, just wait a few minutes. And, if you don't like what's going on, the trend in the market, in this market lately, just wait a few days, few hours, and things may change. So we'll see what happens. Again, after all those are out of the way, right now, the market's rallying on one of those companies, still showing decent earnings. Although Alphabet, I believe, I glanced at headlines, said they have no clue what's going to happen going forward. So it's kind of a risky venture. Oh, and I did want to show you guys one other chart before we get into the rest of the index. This is probably one of the scariest charts I've seen in a long time right now. This is a chart. They're using TD Ameritrade, but that's very indicative. That's where a lot of your retail traders, you tend to have the professional or experienced active traders, as well as institutional traders will use interactive brokers, and you have a lot of retail traders go to TD Ameritrade, and what they're showing here is free trades. And this volatility, and coupled with a lot of people staying at home, has brought a lot of newbies into the market. And so I think you understand the implications of that. You can see here trades have more than tripled since commissions were cut to zero. So whereas they $6, $5, or $7 trades weren't cheap enough before, now that we have zero commissions, you've seen those trades tripled here. It's the daily average trades in millions right here. So that's kind of a scary chart. Reminds me a lot of the dot-com bubble back then. I was working in the financial markets as a stockbroker, and boy, everybody thought they had it all figured out. There's an old saying, never confuse genius on your part with a bull market. Back then, if you were around or study the charts and history, everything was going up. Anything with a name or a .com at the end of the name was going up regardless of fundamentals. And I think that's a lot what we're seeing right now. And again, you had everybody and the brother, people quitting their jobs to day trade because it was that easy. Of course, again, in a rising market, you get bailed out from making mistakes by just being in such a big move up that we were in the Nasdaq stock. So let's go back to the charts. Let's just look at that and focus on the technicals. So we had, again, a little whipsaw signal there on the Qs. We're back above, but it didn't change the technical posture. It did regain that trend line. You have to give it that. I'll have to say, this is where by most accounts you have a wedge. It should have broke down, should have saw more downside, but we didn't. So I'm going to say this very succinctly. I'm short. I'm giving my shorts room. Whether I extend that SPY trade again, suspend the stop, I'll let you know before the close, see what happens. But I will say this, that I don't think it's probably a good time to short right now because there is just this strong bid. The market's shrugging off these so far. It's shrugging off the divergences. We had a little correction at that divergent high, not much. We stayed above trend, and we're still not breaking down. So you'll have to respect it for what it is, whether it's all the newbie traders that are new to the market, don't understand fundamentals or technicals, just buying tech stocks because they listen to Alphabet's report or they believe that the next stimulus package or whatever is coming down the pike will take the market to new highs. It doesn't matter. The trend right now is strong. But here's the thing: we get a sell signal. You're talking, if we had what would it look like? A big reversal, not just through QQQ. I mentioned that pretty clearly the other day. I posted all the sectors, 11 sectors in the S&P 500. I did coverage of all the FANG stocks. You need to see not one index or not one sector, one stock. You need to see all these trend lines go with conviction. Conviction is either one big solid red candle, maybe a second red candle and a close. There's an impulsive move. If the trend line was right there, in other words, this one we didn't go with conviction right away, and then we started to drop, but that wasn't the break of the trend line. So that's what I mean by a break with conviction. And also, most importantly, is the rest of everything else. So when we look at SPY, put up an alternative trend line today. Here it is, right here. We now have, before I didn't really have a good wedge to draw or trend line. If it connected this low right here, we didn't have another reaction here. So two reactions, as I like to say, can be connected at random. And so that's not really a valid trend line. To me, it's that third distinct reaction that helps to confirm a trend line. So although this one's not as well defined as the one in QQQ, it is, I think, a valid trend line, and it takes that form of a wedge. You can see SPY as I talk right now. We're right at that 61.8 Fibonacci retracement level, and that is, if you're not familiar with Fibonacci's, it's a measurement of the move on the all-time highs right here down to the recent lows, and that means we've retraced 61.8% of that move. This is a key. These are the key Fibonacci levels that a lot of traders watch and trade off of. If it's a counter trend, if this is only a counter trend move within a larger corrective pattern or bear market, if you will, then that's the typical range right there that you see. It's not a set in stone rule. If you take out 61.8, that it means that we're going to new highs. But it's just that a lot of traders will look at those levels and trade off those, and so it's worth noting that is a key fib level. It may come in here as resistance, so we'll watch what happens. And then most importantly, as I was to continue on what I was saying with QQQ, you want to see a break of this and then go into the sectors of the S&P 500, everything that I covered the other day. I'm just going to rifle through them very quickly since I already put up the charts yesterday. You have those there. XLK, little whipsaw, just like, remember, XLK is almost going to mirror QQQ. So there's a little whipsaw there. And we're back above that minor trend line. Same divergences building. Still believe they'll play out, and they're going to play out for a pretty sizable correction once the turn comes, and it could come this week because there's, again, to see a rally like this with just one of the five fangs out of the way, I think that's dangerous. especially with earnings, because earnings come after the close when all the other four FANG stocks report tonight and tomorrow. If you're in XLK or QQQ and the futures take a wild ride, then either direction, whether you're long or short. And so again, that's why I'd say right now, with the market being resilient, kind of shrugging off these divergences, shrugging off breakdowns in some stocks, some sectors for the time being. If I weren't short, I would just hold off and wait for those sell signals. What's the point in shorting now when that sell signal could just be another percent or two below, and then there's plenty of downside if and when it comes. So and again, it's kind of a function of earnings week. That's usually when I say keep things light. You have the FOMC meeting this week, earnings, everything else. So there's XLK, XLV, broke down, but not impulsively, kind of hugging under that minor trend line. XLF, the financials, really no change. Only thing I would change here, since that chart I gave you the other day, is we've now made a roughly equal high. That is negative divergence on the PPO, at least, with the PPO making a lower high, and resistance, big gap overhead. XLC, communication sector. This is what Alphabet belongs to, Alphabet and Facebook. And so you have Facebook rallying almost as strong today as Alphabet, because for the same reason. These guys are in the communications. They're not considered tech stocks, at least not as they're categorized in the NASDAQ 100 or S&P 500. They're categorized in this new communication sector. It replaced the old telecom sector about a year or so ago. And that's because they derive a lot of their money, revenues from online advertising. So Alphabet being up, everybody's staying at home, shopping around on the web. That's the implication is that Facebook will have also a nice earnings report. So we'll see. And that's again gamble that's yet to be seen. They're two different companies, similar business models, but not identical. So we'll see what happens. And either way, that one's above trend as well. At the top of this wedge now, simply extend this divergence line. I don't know where that one went, but there's the divergence line right there. So that's a rising wedge with negative divergence, just as this was a bullish falling wedge with positive divergence. This one broke out, back tested, and then was off to the races. So the next sell signal on this, and this is an important sector in the S&P 500, that'll come on a break of the wedge. XLY, still within the wedge. XLI, still negative divergence. Again, nothing much has changed from the other day, so there's no reason to go over each and every one of these. XLE has entered the gap. That's notable right there. Gaps once entered from below are usually backfilled, not always, but there's one to watch. And I'll get to the charts of crude oil here in a second too. We had a nice rally in crude over the last 24 hours, and I'll talk about that as well with USO not keeping up, and I warned about that with these ETN, commodity tracking ETN, especially in the volatile sectors. Hold on, I'm just eyeballing a level right there that should be pointed out, I think, right there. All right, that's it. XLRE, that's these. And XLB. These are the 11 sectors within the S&P 500. So you can see really no change to the charts. This one's still above trend, really within at the top of that rising wedge pattern at resistance, and that's it. So let's move on to the futures real quick, and then we'll get into some sectors and then one of the trade ideas. All right, so we're at this is a 1 month. Chart with hourly candlesticks on the NQ and the NASDAQ 100, and I'm going to put a line up right here. Now let me put it up on top here. This is a pretty big level on the futures. We may not pick that up on QQQ. I'm going to color that line up. I'm also going to make it thicker and color it up. Let's see, make that something will stand out like a bright blue against a black background. That should work. Why? Because you can see that's now we have several reactions. We went up there at that level. It's about 89.56 or so, give or take. We failed. We went there again, failed. Each of these were pretty impulsive drops, and we're there again now. And maybe I did discuss this on QQQ recently. That look, if we break that level, and almost when you get there that third time, anything's possible, but it feels as if the market's probably going to want to pop it now and run some stops. So let me show you. If they do, it's a breakout that, anything's possible, but I think would fail because it will only simply extend the existing negative divergences. What I'm talking about is you can see breakouts that occur with negative divergence in place. Now we didn't break out. This is where that level started forming. We did have a divergent high followed by a correction, but right here, and we did have a divergent high right there. There's your divergence lines, and we had a correction. Yeah, pretty good one. And once again, so technically we have divergence now because we made an equal high and the indicators are making lower highs. And should we pop it anything, again, when I say a marginal new high, if we keep going, that's not a marginal new high if we go a lot higher. But if we pop it slightly and then reverse, oops, that one went away. Let me grab it back. If we pop it and then reverse, and to pop it, it would help clear all the stops and bring in some more longs. It would take that breakout. That would give you that divergent high. It would actually give us maybe even another tag of this broadening wedge pattern right here that I just drew out, that megaphone pattern I've been referring to, and get a reversal there, and it would look something like that. So there you go. You'd have the negative divergence, and you'd have what we call a bull trap, aka failed breakout, false breakout, whipsaw signal, whatever you want to call it, if that and then that happens. Okay, so that would be stage 1, stage 2. Otherwise, we could fail here, and then if we do, that's a failure at resistance. And if none of that happens, we just keep powering up, well, we're going to take out these divergences, and that just chips away at the near-term bearish case. So that's that. You guys know which way I think it's going. I still think it's going down. And I'm going to add a trend line right here that I can see has now developed. Certainly worth watching. Let's see what happens. Maybe we can extend that. Might come in somewhere else. Yeah. There's certainly some reactions there. So let's color that one up too, because I think that's going to be important. Let's if I can click on it, change trend line color. Let's just make that that blue color there. There we go. Okay, so there's some levels to watch on NQ. I already covered QQQ. Let's look at ES. ES really, since this morning, what I did is in the ES chart I posted this morning and would have covered yesterday, I only had this trend line right here, which I showed you. We broke down and back tested. This is where we were this morning. So we're still there. Nothing really changed technically. We still have the negative divergence in place. And what I did since then, I added an additional trend line that I didn't catch this morning, but should have. And so now that's a level to watch. So there's your levels to watch. Failure there would just mean a breakdown and back test, an extension of the divergent high. You just have to be patient when you see these divergent highs. We had a divergent high. Heck, we had one right here, and we got a correction, a little one. Then the divergences grew larger. First divergent high was there. Then we had a divergent high right there. And we had a correction. So it's not as if they didn't play out for corrections. But what happened is the same divergences continued to build and grew larger. And then we finally had a larger correction right there. So that's it. Divergent high 1 was right here. Little correction. Bigger divergent high would indicate a bigger correction, probably down to here. And I'm still leaning that way. So like I said, if you want to trade it, you can take a shot here, or you can, or I like to say or, meaning a partial position there, and add on a break at that level, but keep it all together. Keep an eye on the NQ chart, keep an eye on QQQ, keep an eye on SPY, keep an eye on market leading FANG stocks, some of those sectors, and the more support levels that break and the more impulsive they break. Again, impulsive meaning, this is kind of an impulsive move down. This is not an impulsive move down. So the more impulsive it is through that level, the more likely it is that the signal would stick. And on ES, I just showed you a comparable, pretty important resistance level on NQ. NQ is testing that level now. ES had a level right here. You can see it was resistance there, resistance. We broke above, failed, couldn't hold it, but then broke above it again. We've been trading kind of sloppily through here. We're above it now, and I still think that's significant enough that if and when we come back down through there, that would mean this was a failed breakout. Now we're above it now, so you have to, if you want to say, hey, it's bullish, we're above that resistance level. But again, with these divergences building, the risk that we're going to get a reversal soon is pretty high, in my opinion. Okay, here's crude oil. We'll talk about this briefly. Like I said, if you do not know what you're doing, be careful with crude oil. If you know what you're doing, you trade crude futures. You can take the contract, the leverage factor down. Trade instead of CL, trade QM. CL is the standard contract for crude. QM, and that requires physical settlement. QM is the mini contract. It trades off the same exact price levels you're looking at here, but it's a cash settlement contract and it's smaller leverage factor. You might want to consider that one if you are trading crude, and you might want to stay away from, as I suggested, the ETNs lately. I'll show you in a second here. So you can see what's happened. Look for these divergent highs. Look for trend lines. That one was pointed out there. We broke it, kind of went sideways for a little while, and then started the correction played out, came down here, and then this is a level to watch now at 1026, because you can see that was that reaction low there. We had a brief overshoot of it right there, and we held there. So we set up in this falling wedge right here with bullish divergence, which was a catalyst for this move up, and now we have a pretty well-defined uptrend line right here, kind of a contracting price channel. I wouldn't call that a wedge. Divergence on the PPO, not on the RSI. However, you do have something on the RSI that's notable, and that is an extreme overbought level. Most RSIs, this is the RSI 14, most charting programs is going to populate the lines at 70 and 30. Any line at 70 being your typical overbought reading, that would be about right here, and 30 being your typical oversold reading. But I always say trade in every security differently. In other words, you don't see my 70 and 30 lines here, because it doesn't matter if you try to if you consider crude oil overbought when the RSI hits 70. Well, guess what? If you were trying to short it there or get out of your longs, in many cases you were it kept going, and you would have regretted that. So really, the extremes on crude, I put the line up there, and again, every security is different, but 80 is about it, and this goes back months. And by the way, we're on a 15-minute chart, if I didn't clarify. Usually lately I've been looking a lot of 60-minute charts on futures, but you can see 1, 2, 3. Last two times we hit that level, we were that overbought. We had a correction there, and I'm sure that's every bit of double digits, well over 10% drop. The price swings have been phenomenal, huge on crude, and that one marked it. We didn't stop till we got down here. So here's what I'm noting. At extreme overbought readings, negative divergence, and we rallied into downtrend line resistance today. So an objective short for those with the gumption to short crude oil. This is a key support level. Probably get another reaction there, but if and when that breaks, which with these divergences it maybe we go up, maybe we just extend the divergences a little more with one more thrust up. Maybe we get negative divergence on the RSI, and if we do, then again this trend line should come in as resistance. Now a solid break above it, especially if it burns through the divergences, would be bullish. But right now, I think the near-term outlook is to the downside in crude oil, and quite possibly, all the way back down here to maybe this level here, 1345, 1370, if that trend line there goes. Now, okay, so we're looking at gain right now of 27.39. It's down here in the bottom on crude futures, and that's on the day. And let's see, now they started trading at different hours, but let me show you USO. So you'd think at least USO would be up, what, 20, at least 25, and it's not. It's up 5%. This is a, I don't call it a broken chart, but here's an ETN. They just did a reverse split. That's what that indicates, 1 to 8 reverse split to keep the price up. And you can see now this chart has divergence, but again, you want to keep an eye on the on that chart of CL as well if you're trading. But the point being here is that's a gross underperformance. I don't know. I don't think that shouldn't have to do with the split. I don't know when the split went into effect. That should be adjusted already today. But again, I don't like the fact there's gross underperformance on USO. But it does have that divergence. Let me look at the crude CL 60-minute chart before we move on to the next thing. Okay, this is the 60-minute chart of CL. See, it looks completely different than USO, and that's why. So USO is, as many ETFs have been, having problems tracking, keeping up with what it's supposed to be doing. These are the trend lines here in crude. So there's crude walking up this trend line now, and again, I had on that 15-minute chart, we were looking at that downtrend line right there, but I don't see really anything here other than overbought. So anyways, let's move on from that and look at a couple commodities and we'll wrap this up. Sugar, I'm going to get to the charts, the ETN in a second, but sugar, we had an official trade. They hit the stop the other day, and that one, so that's officially stopped out, but it looks good here. It just took out this downtrend line right here. I'm drawing an uptrend line. It took out this downtrend line right here, the uppermost trend line right here. If I can grab it, there it is. Move that one around. So we broke out. We did so. It's been extending. It's been working its way lower while building some pretty big divergences here. And finally, this is the most recent divergent low right there. And so there's a breakout, pretty big resistance here. I'm not going to add it back yet as an official trade, but I might if it can get up through this 10, 15 level, or maybe even on a pullback to test that trend line. We'll see. I just want to say near term that's bullish because we took out that trend line. It's been moving up, and yeah, there's a little bit of work to do. A lot of the commodities are sucking wind lately, and here's the thing. I think that we're seeing a spillover in some of these ag commodities due to the problems with pork and live hogs and cattle, or lean hogs, I should say, lean hogs, live cattle, due to the the processing plants being shut down. Although what was it? Hogs have been doing okay. HE is, let's see, LE is live cattle. HE, I think this is lean hogs here. And they pulled back to that trend line. They've been moving up, believe it or not. And I think that's government's coming in trying to support that industry there. But where do I want to go with that? I wanted to go back to a couple others here. I want to look at sugar. I just did sugar. I want to look at wheat. Let me find wheat. Before I do that, sometimes I'll forget. Some of you don't trade futures, so you'd look at SGG, the sugar ETN. And let's go back to this daily chart. That's where we base the trade. See, they ran our stop there. One day took a down throw below, right back above, and it's moving up now. And it's doing so. It still has bullish divergence in place right now, as it did, back here. It had bullish divergence. So you better off using the charts of the futures to really plot it, if you will, or to chart it. But see, we can try to fit a trend line. It doesn't fit as well as futures, but that's the one I'd probably use right there off the highs. And so looks like we're just cracking above there. So again, I'm going to watch this one and maybe re-enter that. Maybe we'll get back in around the same price we entered last time. And just so you know, it would be the same targets as before. Cane is the other one if you want to use Cane. That's another sugar ETN. I'm sorry, these are ETNs right there. And I don't have that one marked up for targets, so looking good. And again, what I was getting at is these other ag commodities, with pork and cattle and chickens, you have these processing plants with people shoulder to shoulder, as the product. I hate to sound callous like they do. They call it the protein or whatever. They don't like to use the word carcasses and all that gross stuff. But those people are shoulder to shoulder on the assembly lines, and that's just a mess for coronavirus. They're going to go and they're trying to install all kinds of barriers. You guys read about all that. Most of the people don't want to go into work. Presidents using wartime orders to keep those plants open, but you're going to put a gun to the employees' heads and make them go to work. So we'll see where that goes. But where I'm going with this is I don't think that the processing for sugar and wheat and these grains I don't think those plants are as prone to shutdowns from coronavirus fears as the other ones. So we'll see. Some of the other ones are coffee, JO. Oh gosh, this is a busy chart. Well, we had a divergent low right here the last time around. There's some support there, but let me show you the coffee futures. That's just a lot easier. Again, that's what these ETNs are trying to track, are these futures. All right, so we're coming up on a potential buy point here, an objective long entry at the very least. We have a trend line right here, trend line support you can see. Right there, potential trend line support if we get another tag there, which it looks like we probably will, because we're setting up with some nice potential bullish divergence potential. We can reverse here soon. And so I would say anywhere from about here, even though we're a little bit above that trend line, not add down below it. I wouldn't add below it, and I'd look to stop out if it goes much below there. But I think that is a trade you can get in front of, because I do think we'll get a reaction out there. Reversal will confirm this divergence, and I think at the very least there's a little bit of I'll tell you, there's resistance there, but I think coffee will easily run back up here and quite likely beyond. So the risk reward is very attractive in my opinion. I'm seeing about 9% upside to that target. And you could give yourself a 2, maybe a 2.5, 3% stop. That'd be a 3-to-1 risk reward ratio, and or just let it run. Coffee's been working its way higher for a while now. It is in a more of an uptrend. It's not the strongest bull market, but it has been, as you can see, making these higher lows here again if it reverses right here. And that's why, again, you want to put a stop somewhere below there, especially if it takes out that previous reaction low. So JO is the ETN for coffee, as I showed a minute ago. Wheat looks good too. It's looking interesting. Let me find wheat. So you see that's corn. Somewhere on here I have wheat. Hold on, let me pause this and find. There it is. All right, so what do I see in wheat? Well, I wish it had better support right here. It doesn't. I could put a line right here. Yeah, I could say there's some minor support. Looking at levels, some reactions back here along this point here, which it's at. I don't know why that line didn't snap there. Let's try that one more time. Put a horizontal line right around there. So we are at minor support with a little, next support level down here, 505. But we've been building divergence here, so there's one to watch as well. Really, nobody wants these right now. People are buying tech stocks. They're buying the stock market. I think that's a lot of retail buyers jumping in now. From the look at that chart I showed you earlier, this is watch, rinse, repeat stuff. You look for these divergent highs right there, and they lead to major trend reversals. And you look for these trend lines right here. You trade these trend lines, look for breakouts, and that gives you, near-term rallies and things like that. So there's your pattern right there. It's kind of a wedge pattern. You can go long at support here, down to, but not below that level, and or add on a breakout above resistance here, about 520 plus the trend line, and then these would be your first two targets right here, 539, 540-ish, and 557. And those are futures, of course. Again, watch, rinse, repeat. Divergent high right there, positive divergence, divergent high right there, or divergent low, I'm sorry. Divergent low is bullish, rally. Divergent low, rally. Divergent high, correction. So right now we have divergent low, and so that's why I'm looking for the next move in this next trend reversal coming up soon, and nice rally potential there in wheat. And you can trade wheat with an ETN called WEAT, just drop the H. And as you can see, we've traded this one many times in the past, mostly long, and there it is. Boom, boom, boom. Third target's hit. T1, T2, T3, T4 hit. Pulled back, and so this is watch, rinse, repeat stuff. These were the old levels in the past, and they're levels now, and this is support right here, 528, a level that this way back here, this first target 526 was set just below. I like to adjust, the price targets just below the actual resistance level, and so that's it. We've had a couple reactions there, a gap right there, so the case can be made for an objective long here on wheat with a stop not too far below. And finally, one that I passed along as both a bottoming play, a growth and income trade idea, longer term trade idea, is KHC. Unlike everything else, it's kind of coming back, trying to get back at their old highs. This one already had its own problems, been in its own bear market long before the stock market entered a bear market. So from that point of view, it's most of its bad news has probably been priced in and then some. And from a technical perspective, I mentioned it looks really strong on the weekly and daily charts. A big positive divergence on the daily here, and that shows through on the weekly as well, with a pretty clean downtrend line, which was recently taken out, back tested, and we've been stair stepping higher. The only thing that's keeping me from putting this as an or kept me from adding it as an active trade, the fact they report tomorrow morning before the market opens. So that can either foil this breakout or build upon it. And if it comes back in, maybe it'll come back in for another back test to the downtrend line. That might offer an objective entry, and so I'll still may add this one as an official trade idea. But I just want to post an update, mostly point out that they are going to report tomorrow before the market opens, and so whatever that gain is since the breakout, if you took it, 8% or so, you may want to book profits, or maybe take some partial profits, lighten up before the earnings. And then there's still, remember, a big old gap right here. The potential is pretty big on this one. If it can get above this level here, 33.61, it'll start to, chances are it can backfill. I mean, technically the top of the gap is up here, but you have a reaction there. So these are some longer term targets there, 42 and then 48.15. Possibly 54.62, but that's probably going to take the stock market going to new all-time highs is my guess for this one to get there. And I almost forgot gold, and we'll wrap it up here. Really, not much more to update. Gold's kind of slogging around sideways. I told you my thoughts on that one too. It's like I said, if you're not in it, then probably hold on, wait till the next objective entry. Breakdown back tests, and it's been kind of a lot like the stock market, grinding around sideways for the last few weeks. Most recently you had this little price channel right here, and you broke out, gold broke out, failed to take out the 1728 resistance level, and is back testing the that small price channel from above right now. Not a lot in the charts that I see that tells me the next near-term direction. One thing that I will note and should point out is what the US dollar is doing, and that would be right here. DX, dollar futures, US dollar futures. We had the price channel right here, and that broke down right there, trend line, uptrend, the parallel trend line that gave us this upward sloping price channel. We broke down recently, back tested, came in around that 100 284 level, and we've been stair stepping lower. So really another way to look at this is the dollar is in a downtrend. Now that is normally is net bullish for gold because gold's priced in US dollars. And I believe the reason that we haven't seen gold moving up as much as it should have, despite this, here's our near-term downtrend, the dollar, unmistakable. If we take out, go to another low, which I think we do, I think we'll come at least to this 99.42 level. Then where I was going with that is the reason I think that we've seen gold hold up or not move up despite the falling dollar is what I'm trying to say, is twofold. I think it's the fact the stock market's been inching higher, although it's been in a 3-week trading range. It's up again today. It's a little higher, so we're inching higher now. And so the flight to safety bid is coming out of gold. People aren't buying gold right now. They're buying equities. And when the stock market corrects, we'll probably see more money go back into gold. And the other reason is I laid out the technical case again in gold. I covered GLD, which I probably should do for you guys that are in that ETF. There's been some bearish technicals, small little divergence right here, negative divergence on the RSI right there. Let's extend that out. Other things like that that have given us some technical headwinds, if you will, right here. Divergent high at this point, bearish rising wedge on gold, and we broke down below that bearish rising wedge. So that's it. This is just a potential divergence line. If gold makes another high soon, it's still going to have divergence like the market. But like I said, I think one of the two will prevail. If the market corrects soon, which I still suspect, I still think the risk reward is not attractive to the upside despite the resilient trend. If the market corrects, I think we'll get another leg up in gold and maybe burn through these divergences because gold is still in a primary bull market, and by all nearly all metrics, the stock market is still in what appears to be a counter trend rally in a new bear market. So favor this one going up, stock market going down. But as I said, I can't make an objective case to step in long right now, nor would I care to short gold here either. We'll wrap it up here and get it out to you guys, and I'll let you know what I think before the market closes today. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.